The price of oil moved sharply lower recently. Do you think it was purely based on inventory levels?
It was interesting to see oil react so much more aggressively to the inventory reports than it has to geopolitical events. It was in many ways surprising, but I guess it shouldn't be because the markets don't seem to react to much these days. It takes a lot to get them to move. But the market really didn't react to, let's call it the Saudi-Qatari rift over the past few days. Yet the market reacted fairly violently to a larger than expected inventory build. I wonder whether that's not a delayed reaction to some of the geopolitical events. But in that sense, oil traders have to be a little careful right now. Oil has more or less been in a $45 to $55 range for the past 6 months or more, with a couple of forays outside that band, but for the most part sticking to that range. As we start to approach a $45 handle, if there's risk to the downside, that could be fairly considerable. We could be looking at a break 240. Beyond that, who knows? But that, I think right now the path of least resistance to oil, as with many commodities, tends to be to the downside, and that's definitely something to watch out for in the markets overall.